Hi everybody, thank you for being here. Maybe I'll just invite the panelists to introduce themselves. If you wanna, Abhiram, Saravanan.
Hi everyone, I'm Abhiram Katta. I'm part of Endiya Partners. We are an early stage VC fund. We invest in deep tech, healthcare, fintech, and enterprise technology startups. Early stage seed, Series A. About 35 investments done till date. About 170 odd million of assets under management. So yeah.
Hi everyone, I'm Saravanan. I head financial services and fintech vertical for Premji Invest. Premji Invest is a fairly sector agnostic investment vehicle of the foundation which Mr. Premji established for doing philanthropic activities. We manage roughly about 16 odd $billion across different themes, largely India and US, and private and public markets. Financial services is one of the large themes that we do, but apart from that, we do consumer, industrials, manufacturing, healthcare, and technology. Technology is the core of our themes for investment. We play across stages, right from a $20 million check to a $300 million check. We can play growth, buyout, early stage, pretty much all are under the ambit. It's all about risk return for us. The profit that we generated out of the investments go back to the foundation for doing philanthropic activities. So that's how the fundamental way of Premji Invest structure operates.
Thanks everybody. I'm Roshni, MD and partner at BCG. Been with BCG for about a decade. I work in the private equity practice across sectors. Thanks so much for being here and making the time. I know that flights here have not been easy over the past couple of days. Maybe we'll start with a bit more of a broader conversation on just the role of digital and the themes in digital that you're seeing that private capital is going after and where funds are being raised. Maybe Abhiram, if you want to take that.
Sure. Am I audible? Yeah, I think right now the Indian ecosystem has matured so much that we are seeing quite a few trends which earlier we used to have a lag between the global market and the Indian market. Now we are seeing a greater similarity in the themes which are evolving across the Indian startup ecosystem as well. Maybe say 10 years ago we would have seen a very small subset of sectors which were having disruptions. But today you look at it, almost all the sectors, right from agri-tech kind of very traditional space to something like a space tech, you have startups playing across the space within India. And of course the key term without which none of the discussions are complete is Gen AI. So there again we see a lot of action happening where Indian startups are working on Gen AI, not just from a fundamental models perspective, but also in terms of applications, either horizontal broad-based applications of Gen AI or even vertical focused Gen AI solutions. So I think that way we are seeing quite a bit of action within the Indian ecosystem as well. And of course, there are still areas which need to be evaluated. There are areas, there are questions that need to be answered in terms of what can work, how can it work, by when will it work. For example, the same Gen AI thing if I take. So what's the solution, what is the value, how much will people pay for it, what will enable these startups to scale up to a large size. Those are some of the questions which still need to be answered. But I think across the space, there is quite a bit of action, and good to see that it's not just in terms of the number of startups where we are third globally, but also in terms of the depth and the spread of the digital disruption that's happening in the country.
From our side, I kind of entirely concur with what Abhiram said. Right. Earlier, digital used to be a good to have kind of channel for traditional businesses as well as people kind of like were trying to use that as a primary channel to start this new kind of a business model, right? Amongst the four large verticals that we have, financial services, consumer, industrials, and healthcare, technology has kind of like become a core now, right? So there's no longer, this is one of the channel that we can kind of like tap, whether it is an insurance or whether it is lending or whether it is wealth. People are kind of like reimagining the entire customer journey with a digital and a digital native at the core of the business models, right? So there are companies which are emerging, with digital native kind of a mindset. Whether it is, say a company like Credit Bee in which we invested, or a Deserve that we invested in wealth management, or traditional companies are kind of like quickly adapting technology to kind of like service its customer, right? People are just forgetting about whether it is physical channel or digital channel. All are trying to identify and create a customer-centric view and see how they can use technology efficiently to service those customers. So I think that kind of a model, both the traditional players and the new age players are kind of like adapting across all the four sub verticals that I'm kind of like seeing, right? So I think today, in today's world, probably we can't split or take out the need of digital kind of focus from any of the subsectors, but digital first players will definitely have a substantial kind of right to win over the next decade or two, and they are the ones who will probably create an institution for the next 20 odd years or so. And we are focusing largely on those, right? Whether it is on the consumer side, the companies like FirstCry or Lenskart or some of these things we kind of like backed, and they have established themselves as very, very credible players in their space. And similarly in the new age, whether it is Jiva or Sleep Company or Mintify in the supply chain financing, they're all kind of like keeping digital at the core, right? With the advent of GST and account aggregator and ONDC and OCAN, we have a whole bunch of data, framework that is available, which you can use to underwrite or originate or service the customers far efficiently. People who use those kind of modes will have definite right to win in the future, and we always kind of like look out for such business models.
Thank you, thank you. How do you actually evaluate investments in these spaces, right? So, for example, some of the investments that you've made in deep tech and AI, some of the functional, uses that you would have seen, Saravanan, how do you, what types of work do you do to understand, is it real, is it differentiated, will it drive value, will it disrupt? Because a lot of this is new and early.
So I think particularly the technology first games are relatively difficult to evaluate, right? So as you rightly said, the tractions are very limited. Particularly the whole digital adoption is significantly accelerated during the COVID period, right? So we saw a whole bunch of business models kind of like evolved from education to the customer apps to online delivery and to fintech. Everyone saw a massive boom because people just thought that that is the way the whole industry is going to function. That fast tracked the transition, but is it sufficient enough to get comfort that this is the a natural trend of the business? Very difficult, right? So that is where probably a bulk of the effort goes, right? So we do a whole bunch of things, right? Try to understand the cohort of customer behavior who got acquired in COVID, post-COVID. Are they kind of sticking with us, right? The customer retention or the lifetime value that we generate out of the customers. How so small period it could be, right? 12 months or 18 months or 24 months, because all our new business models, they keep evolving, right? Based on that kind of a patterns, one can take a educated guess on how those business models are likely to evolve over a period of 5 years or 10 years, and then people ascribe valuation or other kind of aspects to a successful business model. But I think when you also talk to the customers, you learn a lot. I think that is one important aspect of a job that investors do as well, right? While the data can show 10 things, but the talking to 100 customer will show a million things about how good the product is or how average the product is, and whether it is product market fit through product or the data or the customer feedback will give a lot more comfort for us to take certain bets, right? When we took a bet on credit B just around COVID period, relatively small scale, but today the sheer quality of product has helped them scale about 8x in the last 4 years, right? And similarly, I can give an example of Lenskart. When we kind of like invested way back in 2016, no one probably imagined that they will reach to the scale of business that they evolved. And Policy Bazaar, when we invested, the outer case premium that we underwrote was about 2000 crores, right? So I mean, we just like wildly got beaten by, which is good, right? In our own thesis. So I think directionally we can get a sense on how a business is going to go and right to win, and then basis that you kind of like ascribe certain value, and then work with the founders to kind of create more value by playing to the strength, right? That is how typically as a fund we play. Again, we play across stages, right? So early stage game is what I explained. Late stage you will have enough data to kind of like play around and figure how the company is likely to evolve in the future and take more growthish or a PE-ish sort of a bet.
Right. We play in the very early stage. If you are early, we are very, very early. So in our case, we don't have the advantage of our past sales. Many of our investments are at zero revenue stage. So there, the way we at least approach it is we have a certain thesis on how we think the Indian digital ecosystem will evolve. And the way we see it is, so in the 90s and early 2000s, a lot of focus was on IT services in the Indian market. And then slowly we had some amount of disruption on the e-commerce kind of space, and then which is again very services specific. And we think it is now time for a lot of disruptions on the product side. And that has been our thesis and focus. So we look for more IP-led product startups. And like I said, since most of our startups investments are in the seed stage with zero revenue or very minimal revenue, so we don't have the luxury of some past historical data of customer usage or feedback. Whatever is there, we go through it with double the detail, but still it's very less in volume. So a significant amount of our time is spent in understanding the idea and seeing if this fits within our own thesis of where the market will evolve and how this could be used. And then we try to again validate that by speaking with potential users, potential customers, potential partners in those markets to see if what the founders are saying, what we are thinking or hypothesizing, is that something which even the future partners and future customers are also thinking. So that becomes a very key component for us. And the other aspect is in terms of the team itself. So the founding team is a lot more critical for us in our seed stage investment, because we know that many times what we have in our head may not translate into that in reality. So we need people who are able to understand that, what is working, what is not working, take feedback from the market, improvise on that, and if required, pivot. So that is something which is going to be very critical when we evaluate our startups founders. So one is in terms of the idea, the potential market, and the other is in terms of the team itself. Of course, valuation is anyways the final thing. But otherwise, these become very, very critical for us, at least in the seed, pre-series A stage that we invest in.
All right. Thank you, Abhiram. Abhiram, you and I were talking about some of the ways in which the companies you've invested in really use tech to make on-the-ground work easier, right, for people, whether it is in recruiting, in financial services, in product management. we'd love to hear a little bit about what these companies are, what they do, and make it a little bit more tangible in terms
Sure.
of how tech is being brought into the real world.
Sure. So a couple of years ago, we invested in a company called Expertia. So this is into the recruitment space. So this is a Gen AI company, Gen AI first company, but it was started even before Gen AI became the term to talk about. So basically, what this tries to do is it makes the recruitment process simpler and smoother and more efficient. So right from helping recruitment teams create JDs to actually posting them across multiple job boards or even their internal job boards, then collating all the CVs received, parsing them and ranking them against the JD. So you don't need an army of people reading and trying to make sense of what is in the CV, but there is a screening algorithm which actually evaluates the CV and ranks them against the requirements already mentioned in the JDs, and then also has a detailed ATS workflow in terms of assigning this to various interviewers. There is also a feature to run a tech interview. So for a tech interview, you need to give a problem and then evaluate the code given by the candidate. So all that is also done by the system. There are also virtual recruiters. So you can actually determine what kind of questions need to be asked for specific roles and depending on the kind of CV. So even the interviews to an extent can be managed through the platform. And finally, there could be some amount of culture fitment, HR aspects which can be assessed before an offer is rolled out. So the whole journey is something which can happen through this platform where recruiters can reduce the monotony in their work and they can focus on assessing candidates better and getting higher quality resources recruited. So this is when I talk about it from a recruitment point of view, right? So this is very applicable across verticals. Similarly, there is another thing which we invested in called PulseGen, which is working with the product managers. So today, when a product manager, all the digital first companies have an army of product managers, but they also have a lot of monotonous work in spite of being at the cutting edge of digital stuff, right? So they need to look at what their competition is doing, what has been the feedback about those products. They need to be on various customer review boards to see what's the feedback, their own internal feedback received, what is the tech engineering team saying, and what is the strategy team saying in terms of where the product should evolve, etc. So there is just so much of data analysis and data collation, and where they're not actually spending time as a product manager, but more as a data gatherer and to some extent data analysis. So this platform actually helps them in gathering all this data and assessing all the data and giving them first cut information in terms of, okay, X, Y, Z are the areas where we are facing issues. A, B, C are the areas where competition is focusing on. So that way there is an output which is coming in from this platform, and the product managers are then able to make their decision faster. Because what also happens is, say you start analyzing the data as of 31st December, maybe by end of Jan is when you'll come out with the actual assessment and views in terms of what you need to do for the next quarter. But a tool like this, a copilot like this can actually help them come to that decision maybe by Jan 7th. So that way there are lots of these disruptions happening which are making life more efficient, faster, and actually helping people make hopefully better quality decisions.
Thanks, Abhiram. Any examples you'd like to share, Saravanan?
Every day I'm kind of like discovering the kind of wonder, if I may use that word, Gen AI can kind of like do to the day-to-day activities done by many of the industries. I'm kind of like surprised every kind of like a day. right? So we are pretty active in US investments, right? We are investors in Writer and Hippocratic, and a whole bunch of investments that we are kind of like evaluating there. And in India, of course, we are doing our own pilot projects on where we can use AI to kind of like streamline the ops function largely across two major verticals, right? I think FinOps and healthcare, these two sectors are ripe for disruption, using Gen AI tools, right? Whether it is in terms of claims management or collection analytics, a whole bunch of interesting value add. 60-70% of the work can be done very, very smartly with a well-trained Gen AI tools. There are some interesting companies evolving in that space as well, which we are very closely monitoring. India is still yet to companies are yet to evolve to a growth stage kind of capital, but very soon with all the work that Abhiram is doing, hopefully there'll be more companies coming to a growth stage kind of a scale. But there are, as we speak, about 8 to 10 projects that we are running across our portfolio companies in the financial services space, where we are trying to see where it can reduce the redundancy across the functions that I mentioned, whether it is collection analytics, cross-sell potential, or identifying claims. Right, there's some interesting company in the US, right? So where it can run an engine that can tell where the insurance disputes are going to come and say that this is a likely price it is going to get settled. Why waste 7 years in legal kind of a hassle? Just settle and move on, right? And that kind of a model is massively profit and revenue generating model for the insurance companies, and that is something which is very much adaptable in country like India. And so I think I see only massive potential across portfolios for us as well as new investments, and we are trying to disrupt our own investment process with the Gen AI, right? So why 50 to 60% of the mundane work needs to get done by usual means, right? So I think there is a lot of opportunity. How do we use it judiciously can create disproportionate value.
Maybe a final question before any audience questions. Any spaces which you feel have not played out or are potentially a little bit overhyped in terms of application? Sorry, I know this is a surprise question, guys. We had not discussed this before. But any spaces that you feel, are perhaps a little bit overhyped, may not actually show the potential, require more real-world intervention and engagement, or perhaps, there is opportunity everywhere.
At least one area that we have seen, right, is maybe a broader term will be digital health, right? So what we have seen is many of the startups actually, if you look at the trajectory of Indian ecosystem, right? So we had B2C e-commerce kind of players who started off first. So later when the digital health players started, so there was a lot of the consumer mindset which came in without the healthcare specific mindset. So you can't sell a healthcare product or a service like any other consumer product, because this has its own implications in terms of the medical validation required before you can sell something, and the way you can sell it. I can't sell a weight loss drug like I sell a shampoo, if I were to simplify, right? So I think that's where some amount of mismatch has happened in the market, and which is where some correction also has happened, and people are making some of those changes. But I think that's one area where some amount of correction had to happen. And the other area where I've seen that is also in terms of fintech. So fintech also, again, people, you talk about, okay, again, if I take the same shampoo example, I can't give any guaranteed results in my advertisements for financial products saying I'll give you X percentage return, etc., right? And it's a very regulated market and for valid reasons, right? So again, there I think there has been some amount of learning curve where people started off in one way, and maybe that's the initial excitement which you'll see always when a new disruption is happening. But over time, people realized, regulator also came up with some broad guardrails, etc., and then things have evolved. But I think these two, in the evolution stage, they had some of those missteps.
I think every 5 years, 10 years, people need some sort of things to hold on to, and they will definitely create a massive hype around it, right? And then investors will kind of like flock, founders will flock. Right? It is a cycle, right? There was a lot of thing around crypto, blockchain about 5 years back that weighted down. Now we were kind of like chatting. Everyone is putting a .ai in front of their company, whether they do AI or not. I think if you kind of like wade through some of those noises, you can always find a real utility companies in each of these, even in blockchain, even in AI. Right, that froth will eventually come. Right, people will kind of like get hyped around some of these things, right? And during those froth moments, some kind of a bubble gets created around some themes, right? So I agree, right? You just can't digitally sell a healthcare product or an insurance product, right? Insurance is still a push product versus a pull product, right? Credit, if you announce, everyone will take money. There's no restriction on that one. But if you are asking people to pay for the production, they will ask 100 questions. But if it is not being serviced properly, by someone selling digitally, it is not going to, find takers, right? You have to figure out a means of doing it in a more hybrid manner. And if you miss that physical part of it, then the digital thing will fail, right? And that is kind of like one example. Same with even in education, right? A lot of edtech companies kind of like came up. Again, the physical touch, if it is not hybrid and if that kind of like is not serviced properly, the bubble will kind of like go down once that compulsion goes. Like COVID was a compulsion, right? Once it goes, naturally, that kind of a need will kind of like come down, right? As long as one is balanced in terms of not letting the froth dictate the direction, and wait through that and see the real value add that is happening. As I said, Gen has a massive potential, right? But if we kind of miss that kind of a thing and go behind a little bit of a froth, then we'll struggle. But otherwise, I see that with a little bit of a listening eye, one can kind of focus on high potential areas, leaving aside some of these noise that I would say.
Thank you so much, Abhiram and Saravanan. Any questions from the audience? I think we have time for one or two questions. Could someone share a mic, please?
Hi Abhiram, so this is actually a question which Roshni hinted and I'm asking that. So, so on the valuation front, so like in the pre-seed and seed stage, how do you value these startups and what's the method? For example, the two examples you gave,
Right.
how would you do that, and if you can share your insight onto that?
Yeah.
And how much would you fund it, not to overfund it or not to starve it for the money? So again, how do you?
Sure. So we actually take 5 sheets of paper, write random numbers, put them in. Whatever comes out is the valuation. No, not to reveal inside secrets, but so it's difficult. It's difficult, right? And we don't have the advantage of P multiple or a revenue multiple or a price to book. None of those things work when the revenue is 0, when assets are 0. And in fact, we have invested in companies where the company name was not finalized. After the term sheet, with a blank for the company name, they went, registered the company, and then we filled it up. So in those cases, it's more an art than a science to an extent. So what we try to see is in similar space. If I take, for example, SaaS companies, what are the various stages at which people keep raising funds? Again, we know broadly they'll raise 3 million to start with, then another 5-7 million kinds, etc. if everything goes on a positive side. And what is the valuation they reach at various stages. And then once they start making revenue, the ARR multiples will be obscene if you just go by ARR multiples. But you know that once they hit a certain number, then they'll start aligning more towards the public market multiples. So that's the broad theory. Based on that, then we work out how much these people might need and in a way work backwards. And then there are again some amount of thumb rules saying, okay, initially for a seed stage, it's in a range of 8 to 12 million is the valuation. Then how much you invest will determine how much stake you will get in the company, and again, how much dilution the found, and beyond a point, it's more commercial negotiation. And like we were discussing earlier, there are some companies where you have 20 people trying to invest, in which case it becomes slightly stretching on the valuations. So somewhere you might have started 8, but then there is so much of demand that you are moving it to 9 million valuation kind of stuff. So some amount of those negotiation based changes happen, but broadly this is how we'll have to do it. You had a question?
Yeah, any comments on climate tech?
No.
So, I think on the climate tech, there are a bunch of, interesting areas, particularly focused around EV and democratizing, solar, right? So I think from our sense, how the solar has evolved over the last 10 years is kind of like giving directionally where it will settle, right? To democratize this whole green energy, whether it is for consumer purpose or for small and medium enterprise, business purpose, financing is going to play a very, very important part, right? Someone who can kind of create a large pool of capital to enable this will definitely drive the penetration, in the solar side, and similarly in the EV also, right? So people are kind of like finding it relatively less affordable. Of course, costs are kind of like coming down, whether it is in the 2-wheeler or a 3-wheeler. Financing will play a major role. So any sort of climate tech related investments, if it is backed by a solid financing vehicle or means, with a attractive pool of capital that one can draw from, it can definitely accelerate the journey. That is one of the lenses that we use for climate tech, but it's a large vertical to kind of like comment on multiple areas.
And just to add to that, like he said, climate tech is, I would say it's more a horizontal than a vertical, because every industry has a climate tech application, right? So that way, there are lots of changes which are happening. One area where we have seen a reasonable amount of action is again on the reporting side, sustainability reporting side. We are trying to understand how big those players can get and how the revenue cost stuff will work in that space, but we have seen quite a few players, right from scope 1, 2, 3 measurement to BRSR to global reporting standards, lots happening there. So lots of people are moving there, but to what extent are they doing it as lip service versus actually focused on reducing those emissions, etc., using these reporting platforms? I think that is some journey we'll still have to go through.
And if they go for a pivot, should they totally change their business or only the existing business model?
Sorry, could you clarify
Okay, so when do you think a business should go for a pivot? And when they go for a pivot, should they only change business model in the existing business, or it should be like totally business change?
that? Oh, you mean a pivot? Yep. Okay, got it. Like a change in the business model.
Change in the business model.
Yeah.
So I think my perspective, I know Saravanan might have a slightly different one, but I'll say first decide if you even want to take capital from someone else. If you can build a company and run it without taking someone else's money, see, each one is a different path, right? You can build a 100 crore company in 10 years without external money versus build it in 3 years with external money, just as an example. But it's up to you as a founder whether you want to take money from others or not. Fine, I'm an external investor, I would want to invest in good companies, but I think that's your choice. But when is again a founder's choice in terms of do you need the fuel for speeding up the growth, expanding to other markets, etc., etc.
I think he was
Oh.
Yeah, so I think the question, maybe
okay.
I'll just reframe the
Sorry.
question. I think the question was, at what point in a company's journey do you think through should you pivot or not, right?
Okay.
And when you pivot, how do you think about it, right? So maybe just what are the triggers and whether it is commercial model or product.
Oh, okay. Sorry.
Yeah.
Got it now.
Anything you want to add, Saravanan?
So, from growth lens, I'll kind of like talk a little bit about, right? So we can kind of like do some course correction even after certain mature stage of businesses, established. I'll give an example, right? So there are multiple examples it could be. One of the things it could be regulatory. Right? So for example, people have built certain business model and scaled it to certain stage. I don't want to name the companies and stuff to avoid, issues. But once you kind of reach a particular scale, you kind of like come under the radar that you are not supposed to do certain kind of a business models as a regulated business. Naturally, you have customers with you, right? You have the liberty of using those customers into an adjacency in the business model, right? Pivoting to the adjacency in the business model is possible at that point of time because you have customers whom you have already acquired and they see the experience of products that you have. Then you have to kind of like move them to adjacency. That sort of pivoting is possible to survive, in that, environment because it is make or break at that point of time because you can no longer continue. That pivoting can happen for 2-3 different reasons, right? One, economics goes down because of whatever reason it would be. B, it just kind of like puts a break because of regulatory reason or whatever reason. It's no longer the business model is possible to continue, right? C, cross-sell potential comes in. You kind of suddenly figure out that you have 10 million customers. You are better off, doing XYZ than ABC that you started off with. Entirely depending on survival to maximizing your profit pool, you have a whole range of reasons for pivoting. Depending on people kind of like how they evolve in the business, particularly it happens between year, there's no rocket science, year 2 or year 5 of the business, all this repivoting happens when they kind of like discover more about their customers and insights for either maximizing the profit pool or some cases shouldn't be. For survival of the business model itself, they will have to pivot and do changes.
Thank you so much, Abhiram and Saravanan, for making the time, for flying down here. Like I said, all of our flights were complex and difficult, and for sharing your insights with us.
Thank you so much for everything.